Hi guys, Piotr here, this is LiteFinance Global YouTube channel. It's my pleasure to be with you again. Today it's time for the best trading setup when it comes towards the end of the year, and we are going to discuss euro dollar. So without further ado, let's jump straight and see the video. Okay folks, euro dollar, as I've mentioned at the very beginning, and well, it's going to be short, sweet and straight to the point. We are going to discuss medium, short and maybe even intraday best trading setups when it comes to the top major currency per euro dollar. Well, if you do remember, some time ago we were discussing deeply, we dive deeply when it comes to the euro dollar, and to be honest with you, we were very close to hitting the target. So overall, the base scenario we are going to discuss today from the medium term perspective is the bearish case. I think that we haven't hit the bottom yet, and that's my explanation into that. We have to take into the consideration what we've seen in this consolidation phase, and as well what we've seen here before the upside break, right? So let's clean the chart, let's place few lines here. So especially we are taking into the consideration what we have seen here, right? It's a weekly chart, so let's place the blue line here. Let's make a little bit of the changes, a little bit bolder. There you go. So as you can see, we've been very close, but we haven't hit the bottom, in my opinion. How I think that we haven't hit the bottom? So that's the evidence number 2. If that was the consolidation phase right over here, if we can call it some consolidation phase, I'm not taking into the consideration this upper shadows, but I'm taking into the consideration this price action and what we've seen after the stop hunt to the downside, the rally over here and the rally over here. So let's have a look. So again, let's switch to the blue color because it's still the weekly chart over here. So as you can see, after the false break over here, we've seen the huge rally. How huge the rally was? Well, very easy to make the measure because it was the whole size of this consolidation, as you can see right here, right now. Boom, almost to the peak on a weekly chart. That's quite amazing, as you can see over here, right? As you can see over here. Then the huge pullback. And when we've seen the bottom of this pullback, well, in the mid of that consolidation, midline 50% of that consolidation, and we've seen another rally, and the rally was again the size after the upside break. It was the size, not quiet, but like the consolidation. Now, if that was the consolidation and we've seen the break to the downside, right? So as you can see over here, once we took out this stop hunt level, we should theoretically, right? Nothing is here, nothing is working as a holy grail. You have to do your own research, you have to do your own homework as usual, but we haven't hit that bottom yet. Instead, we have from the very beginning of the November towards the mid November lately, because also the post weaker US CPI number, we've seen profit taking, and usually the November, you have to remember guys, make the note, usually the first decade, second decade of the November is profit taking. If there was a strong move overall over the course of the years, the big names, they are not waiting till the end of the December. They are taking profit very often much earlier. In that case, there was the weaker, I wouldn't say weaker, but that's how market read the latest US CPI weaker number provoke this profit taking. Now the thing is that we are doing nothing when it comes to the bears. They haven't been hurt, and well, to be honest with you, I'm not gonna be surprised if we are going to hit the mid of that consolidation is the latest target around 1950, where what we might see as the rally, right? So that could be the case from 1950, but I have two more supply lines over here. Let me move out this consolidation box. I do have this pre-breakout lows that was the fake, this pre-breakout lows as a supply line, and well, to be honest with you, the level been hit. We do have rejection, right? We do have rejection. And one more trading line over here is related to supply demand theory, right? So it's a little bit higher. We hit both supply and we've seen the rejection. So overall, you may want to, in the medium term, you may want to scale into the short position with the final target around 90 to 50, maybe 90, right, with the stop count. That's how it might look with the bearish case scenario. Alternatively, if we are going to see the weekly close above 105, all right, a little bit of the nice price action to the upside towards 110 from the long side perspective could be in place. Your buying levels are around 101.50 as well as around 99.50. So in that case, you are looking for this type of the price action as an alternative to the bear case, which is a priority here in my opinion. Either from the current level, as we hit these levels, if we are going to see the weekly close above 105, 109.50, 110 could be in place, and you may either want to trade this type of the price action scaling into that position, or if we are going to get the close above, you may want to get out looking for a weekly hit of the 109.50, 110, or move back below 104.50 on a weekly close. So that's the medium term. Let's have a look what we have when it comes to the short term perspective here on the euro dollar daily chart. In that case, I'm not gonna be surprised if we are going to see the market trying to attempt a little bit higher, because we have some kind of, well, this consolidation when it comes to the daily. This time we have to move and change the color into the green one because it's a daily chart. Again, half of that consolidation, right, plus this breakdown candle over here, all of that corresponds with the weekly chart we discussed a second ago, and here in the daily we have supply as well. Right, in that case, from the daily chart perspective, I would look for the selling opportunity around the current level with the target of this latest weakness here, here, and here. We are talking in that case around the parity with the stop above the top of that consolidation. So if that's the name of the game, what's your risk? Well, let's have a look. If we are going to retest that level with the stop above, right, and we are targeting, let's have a look. There you go, a little bit higher, right, and we are targeting the latest weakness. So in that case, 1, 2, and around 3R from the daily chart perspective. Alternatively, you may want to look for the buying opportunity around these levels, trying to take into the consideration this swing low. So in case of some kind of the turnaround, buying around the parity or a little bit of the below parity, with the stop below 99, targeting 104.50, 105 could be the name of the game. Finally, intraday perspective, let's have a look what we have on the hourly chart for the next few hours and days. I would like to see this type of the price action moving below 101.50. That's step number one. Hitting the stops above 105. Rejection down towards 102.50, and then trying to set up the short around 103.50, 104.50 with the target and stops below the parity down towards 99. That's how I see the things on euro dollar short term from the bear side. When it comes to the upside, so this is very similar to what we discussed second ago based on the daily chart. This is the consolidation. That's the 50%, looking for the possible buying opportunity on the sharp pullback down towards 98, with the parity as a first target, 105 as a second target. From the intraday perspective, more swing trading, because it's gonna be tough to hit 5-figure from the day trading perspective. With that being said, guys, do your own research, do your own homework. Wish you great next trading session. Please like, subscribe, leave the comment in the comment section. See you around, take care, and goodbye.